Demand for gold jewellery declined by 25% to around 115 tons in India during July to September quarter this year compared to 152 tons last year. Demand for bars and bullions primarily used for investments also slipped by 23%. This data is revealed by the World Gold Council in the latest Gold Demand Trend Report. To discuss the report in detail, Somasundaram PR, Managing Director for India at the World Gold Council, joins us now. Thanks a lot, Mr. Somasundaram, for joining us. If you could tell us, why do you think GST was a deterrent for gold buyers, as you have mentioned in your report? What does your survey really reveals?
Well, you see, the industry is very large. It's got nearly 70% of the people in the unorganized segment. By unorganized, what we mean is, people who probably may not have the, computer systems, are not well integrated with enterprise solutions, all this kind of stuff. Compliance standards might just be linked to the individual working. So that is 70% of the industry. So, and GST is a big transformation. It requires a lot of, it produces traceability about where you buy and where you sell. So that we did anticipate that this transition to the GST regime in a complex supply chain like this with 70% unorganized players will cause some issues for 12 to 18 months. And that's precisely what happened. The organized players have actually benefited immensely. You could have seen it from most of the listed jewelers as well. But the unorganized segment certainly did have teething problems.
Mm-hmm. So are these players actually able to cope up with GST at all? And then what's your outlook for the coming quarters? What happens to these people and what happens to the overall demand due to that?
Our view is that, quite a few of the players will probably, raise the bar. They will adapt to GST. They will take their time, but they will adapt to GST. They will also have to see benefits in moving fast to this new GST rules, regulations, compliance standards, whatever. So we believe that that will happen. So it is not that the unorganized players will completely shrink, but the organized players will take a lot of market share. That is certain. But it will not mean that the unorganized players will go. First of all, we have to understand currently the state of the industry is such that it has already shrunk 21% compared with last year. There is a fall in demand. So within this, you see that GST has probably moved the needle in favor of the organized players. But what has happened to the demand is that it is going to come back because India, structurally nothing has happened to, reduce the demand from 850 to 675. So once that happens, even the unorganized players who have adjusted to GST will bounce back in a big way. Specifically, what do we expect in quarter four? Quarter four, we do expect the demand to be a lot more positive. The reason is, while yes, we have seen the demand in India drop 24%, imports are actually up 62%. So which means, and the market is still at a premium of $1 to $2. It is not at a discount. So that means that there is still optimism in the wholesale trade about the consumer demand. So given all these factors, we believe that quarter four and quarter one of 2018 will tend to be far more positive than we have seen in quarter three.
The Money Laundering Act is another point that you have mentioned in your report. The act got modified actually. Maybe it's not captured in the data that you collected over the last quarter. But going forward, will it also help?
Yes, it will. We have stated that in our report as well that, prior to Diwali, obviously, the trade representations were heard and the decision was right about removing those controls because there were too many things that are happening. The industry anyway has been going through a spate of changes since last year, first quarter, with the introduction of excise duty, then the PAN card, and then the demonetization, then GST, then PMLA. So it was the right decision to allow the trade to probably operate Diwali without the restrictions of PMLA. And I think that has helped demand and it will continue to do so. But more than that, as I said, there is also that underlying optimism about the trade, that's reflected in the wholesale segment, who have imported nearly 62% higher than last year, but it's not got reflected in the consumer demand. And the market is not at a discount. And this is a wedding season. So all factors seem to play positive. We've got to see how it gets reflected in the consumer demand. We are optimistic about it.
Let me go back to what you mentioned a little while back, that importers, the wholesale players are actually quite bullish. What is the reason that this segment is so bullish, despite retail demand being so tepid?
There is always a certain lag. It's never that what you see as imports immediately gets reflected in demand. There have been cases where demand is high and the imports are low because people do tend to dip into the stocks. So, but the question is, when you see this happening in the wholesale trade, it is one of the factors you consider, saying that market is not at a deep discount. We have seen discounts of $50 last year in July to September, but currently the market is at $1 to $2 premium. And the imports have been higher. In anticipation of GST, post GST, lots of reasons for that. Which essentially means that there is certainly the underlying activity in terms of fabrication, in terms of stocking up is high, and that tends to tell you that consumer demand, the pull will happen. There is optimism about the wedding season. So otherwise, people wouldn't be importing.
Correct. Now, could you share your projections for the coming quarters?
Well, we don't give a quarter-wise, but for the full year, we believe that it will be about 650 to 750 tons for this year. The last year was 674. It will still be below the 5-year average. We have mentioned that, and we do expect this to continue. But 2018 will be, in our view, will certainly be step up towards that 5-year average. So you will see something moving up, several notches. For the current year, it's 650 to 750, perhaps around the lower end or the mid range, given what's happening in quarter 4.
And why is the demand still below 5-year average is what your projection really talks about? Is there a medium to longer term trend maybe emerging here where people are no longer interested in gold?
Yes, we did some analysis some time back, econometric analysis going back to 25-year data and linking gold demand to how it has behaved in response to various factors. One thing came out clearly: increase in income is the prime driver behind gold demand. Then comes inflation, then comes gold price, and then monsoons. Okay, these are some short-term factors as well. So, but what we saw clearly was for every 1% increase in income, there is a 0.9% increase in demand. But for every 1% increase in price, there is only a 0.5% drop in demand. So that is, this is what the analysis showed. So clearly, income drives gold demand, because it's very clear, part of the income goes into savings, a part of the savings goes into gold, and that is structurally the case in India for the households. So given what we are seeing, rural income being doubled by 2022, GDP growth, we do expect that these factors will be hugely positive for gold demand in the coming years. And we also have a lot of people actually entering the middle class. We do believe that given already the low per capita consumption of gold in India, this will be a big driver at the bottom of the pyramid.
Well, many thanks for joining us and giving us all these details.